Vivek joins us now to help us out with the JPMorgan note on the power companies. Vivek.
Well, that's right. Good morning. The utility space has been in focus. This is on account of, the rising demand that is expected due to the impending summer season. Today, it is the turn of JPMorgan. They've written a note where they've initiated coverage on utility space and within the utility sector. They have coverage on 5 stocks. Within those 5 stocks, NTPC and PowerGrid, the regulated utilities, is where they have an overweight rating. NTPC, they have a target price of 417. PowerGrid, a target price of 316. Tata Power, they have a neutral stance. JSW Energy, underweight. And Torrent Power is where they have a neutral stance. What is the key point as far as that they're making as far as the utility space is concerned? They're saying Indian electric utilities as well as independent power producers actually face structural power demand growth. However, they say that there are sectors in which it makes sense to go ahead and chase expensive stocks. However, they believe that the power or the utility space is not one space where you can go ahead and chase expensive stocks. However, when it comes to individual stocks, NTPC, they have an overweight rating. Remember, they believe at 1.6 times price to book, it's quite reasonable for a regulated utility which is capable of generating approximately 12% return on equity on the book value. Now, coming to PowerGrid, they are quite positive on this particular name. They call it their preferred play on structural growth in India's transmission capex story. On Tata Power, they believe that while there are significant positives, the stock, which is currently trading at 2.9 times FY26 price to book value, for average ROEs of 12% at this point of time, risk reward is not very favorable. On JSW Energy, they believe that the valuations are actually at this point of time capped the upside, which is why they have an underweight rating over there. And lastly, Torrent Power, once again, valuations at 13 times FY27 EB to EBITDA is what is limiting the upside. Overall, a positive note as far as the power demand is concerned. However, valuations is where they, at this point of time, they have a few underweight and neutral rating on stocks.
Okay, all right. Thanks a lot for that, Vivek. Well, let's